Here's what's coming up on Beacon Retirement Strategies.
What most people have only known about is standard diversification. Don't just have one fund, have many different ones. And they're right about that. But to us, especially in retirement, that may not be enough for everybody.
And then if you have what we call an income gap, which is simply the difference between what is required to support your lifestyle in retirement versus what you get from guaranteed sources like pension and Social Security, making sure that regardless of whether the market goes up or down, that you have predictable income to support your lifestyle.
Some 401ks offer some really good opportunities. Roth 401k, maybe a variety of investments, but you could still have somebody giving input into that during that time.
And now the hosts of Beacon Retirement Strategies, Pete Benson and John Maxson.
Hey guys, super excited for this week's show.
Yes, we have 30 minutes of power-packed information just for you.
So don't go anywhere. The show starts right now.
Hi, and welcome to this week's Roundtable. Guys, I've got a mouthful for our topic today. Are you ready? And Pete, I'll begin with you. Standard diversification versus asset class diversification. Define both of those terms so we know what the difference is.
Standard diversification is just in one asset class. Let's say mutual funds, ETFs, exchange-traded funds, stocks. It's just the stock market. So it's one asset class. Asset class diversification means that you have good diversification in several different asset classes like principal protected, income, growth, whatever it happens to be. There's various asset classes that one can have, even real estate or something. And so you need diversification in each of those and then around each other, not just in the stock market. What most people have only known about is standard diversification. Don't just have one fund, have many different ones. And they're right about that. But to us, especially in retirement, that may not be enough for everybody.
So what does a family do? Because it is a complicated item, right? Mm-hmm. How do I know in my portfolio if I have asset class diversification or not, and if I need that?
Mm-hmm. Well, one of the things I tell folks is we believe that there's thousands of investments out there, but there's only three characteristics that describes every one of them, okay? You've got return, you could say high return or return that keeps up with inflation, liquidity, and capital preservation. Okay, and we believe that every investment that is out there can only have two of those three characteristics, or each asset class. So for example, a lot of times folks will say, well, should I have any money in a bank? Well, sure you should, but what are you going to get in a bank? In a bank, you're going to get liquidity and capital preservation, but you're not going to get a very good return.
Right.
So a bank is an asset class that you need to have some of, but not all of your money there. Likewise, if you go to the stock market, we think people should have some of their money in the stock market. In the stock market, you have liquidity. You can sell stocks, bonds, mutual funds. If the market goes up, you can get a good return, and you're not going to have a good return though if the market doesn't go up. So again, when you talk about asset class diversification, it's about understanding these three characteristics, and there's not one asset class that gives you all three of those, but yet you need all three, right, which is why you want to spread it out between different asset classes.
So you gave me two of those buckets, I think, the bank world, okay, and the market world. What is that third bucket we need to be aware of?
Well, you can have the income world, where you can have fixed income and income producing investments that could be securities, but they could be more conservative where it's principal protected. So there's kind of like, two ways to get that income bucket for yourself. So those are kind of the ones that most people look at as far as their diversification. Income, protection, growth. We tell people you need all three. Many people have a little bit of each, but do they have the best pieces to provide the principal protection? Because just because it's conservative doesn't mean you don't want some return there. So if you're getting 0.5% or 1%, what if you could get 3 or 4? Would that be better? And so it's looking within each of those asset classes and saying, do I have the best products and the best investments inside there?
Could part of this be, and I'm just going to wrap up because I got about 30 seconds left, John. If I'm fully diversified in the market and the market goes down, it doesn't matter really how diversified I am in the market because chances are it's all going to go one direction. So I have these other asset classes, right? So if one goes down, the others are okay. Is that the theory behind that kind of?
Yeah.
Or I'm simplifying it, but is that the theory?
When one asset class zigs, the other zags. Is
Gotcha.
really kind of the thing to do. But here's the one thing I would say about that. You know, when you go to an investor that has a 60-40 stock bond split, 40% bonds.
Very popular years ago, right?
Very
That's very popular.
It's an old philosophy,
Yeah.
worked great in the 80s and 90s, not so much today. In 2008, the last correction we had, the average 60-40 stock bond split was still down 32%. So that's not my idea of a more conservative portfolio mix for someone who's retired or close to retirement.
Pete, John, thanks so much. Hey, if you want more information about this topic or anything else we spoke about here, give us a call in the office. We'd love to start a conversation with you, or go to our website. And don't go anywhere. We'll be right back.
You're watching Beacon Retirement Strategies, Nashville's retirement television.
You know, John, one of the things I love hearing around our office from clients is that they love the full service, comprehensive approach that we have.
Well, it's been a game changer for our clients and for prospective clients because they can come to one place and meet with all these guys.
Yeah, I've found that clients find a lot of value in the estate planning area, having the opportunity to meet with a tax professional or a financial professional all in the same room most of the time. It allows us to set up a more thorough plan for them.
And they have a lot of questions about health care and that too, Dan.
Now that we have Frankie in the office doing health care, he can do Medicare, he can do standalone plans if you want to retire before the age of 65. That's complicated.
Yep.
There's some great plans out there. A lot of people don't know there are because it's too complicated. Now we have one person in-house that can really research all of those who's fully independent.
You know, the number one thing I'm asked when people come in is what is a tax-efficient planning strategy? And what I talk to them about is how do you get some tax-free assets, whether it's Roth conversions, Roth IRAs, other ways of getting tax-free assets. What we're trying to do is make sure that people are able to keep more of their hard-earned money.
How would you like the opportunity of being able to sit around a table in one office and be able to have help all in a good comprehensive plan for taxes, health care, income, estate planning, investments, and all of that? Well, guess what? You can at Beacon Capital Management. Give us a call. We'd love to be able to meet you and help you in any way that we could. 615-436-6000. Give us a call. All of us would love the opportunity to be able to help you and your family.
You're watching Beacon Retirement Strategies, Nashville's retirement television.
This week, we're going to talk about part 2 of our 3-part series on building your financial house. Now, just by way of review, last week we talked about the foundation of your financial house and making sure that you have a rock-solid income plan that deals with maximizing Social Security and making sure you're making wise pension choices if you're fortunate enough to have one. And then if you have what we call an income gap, which is simply the difference between what is required to support your lifestyle in retirement versus what you get from guaranteed sources like pension and Social Security, making sure that regardless of whether the market goes up or down, that you have predictable income to support your lifestyle. You want to make sure that you have a really solid foundation. The foundation of your retirement is always going to be your ability to produce income. But it's not just about income. We also, this week, want to talk about the walls of your financial house. And when you talk about the walls of your financial house, what we're really talking about is growth. The reality is people are living much longer in America today. In some cases, they're living as long in retirement as they did in their working years. So how do you make sure that you have growth on your investments that accounts for inflation and what we hope is a very long retirement life for you and your family? Well, when you talk about growth, what most people think about is beating the market or beating the S&P 500. We would tell you as a firm that performance is important, but we're not so sure that it's as simple as just beating the S&P 500, because the fact is, if your ultimate goal is just to beat the market, you not only have to accept the reward of the market, you also have to accept the risk of the market. And when you are retired, we believe that that is a bad deal for you and your family. So how do you really look at growth across your portfolio? Well, what we want to talk about is a bunch of building blocks. And again, along with performance, you can get to performance by being efficient, not just on your money, but also on things that impact your money. And maybe if you're efficient on these other areas, you can actually take less risk and get to the same place while supporting your income. So how do you do that? Well, let's talk about things like taxes. The reality is there has never been a better time in our country to do tax planning. And taxes are going to be a huge debt to you and your family for the rest of your life. And now, why is that? Well, for most of you, you saved and you deferred and you put money into 401ks for many years. And our industry told you that was the right thing to do. And it was. So that's the good news, is you save for the future. You've amassed this money in your deferred accounts like 401ks and IRAs. That's the good news. The bad news, however, is that that money is not all yours, because there is a debt that's owed on that money, and that debt is taxes. And taxes could be one of the biggest bills that you have in retirement. So the point is, if you could not eliminate but reduce taxes or be efficient in taxes throughout retirement, that's something that could help the walls of your financial house or your growth. But you also want to get into things like fees. Fees can absolutely take away from your performance. So is it possible to actually reduce the fees in your portfolio? Well, you have to start with understanding what they are, and that's one of the analysis that we do in our firm. So if you can reduce taxes and you can reduce fees, that's going to be really helpful to the growth of your overall portfolio. But there are some other areas. We want to plan for things like market risk and interest rates. Interest rates have been going down. Are they going to go up? Well, probably not by a lot. You probably can't get a reasonable interest rate in a bank account right now. Are there some places that you can get that? Then you want to talk about inflation. That's one of the things that many times folks don't even look at relative to the retirement or their income. Bread and milk and energy is not going to cost you less 5 years from now than it does today. So what is your written inflation plan that your current advisor has given you to account for the effects of inflation? And when you talk about inflation, you can't have that conversation without talking about healthcare. When you have normal inflation that the U.S. government says is about 2%, healthcare inflation today in America is growing at a rate of about 4.5 times the rate of normal inflation. So having a plan for all of these building blocks, in addition to a rock-solid income plan, can really help your overall growth, not just today, but throughout retirement. Well, if you have questions about any of these topics that we've talked about today, give us a call in our office or go to our website.
Your tax tip for this week concerns Roth conversions. Two events have resulted in a renewed focus on Roth conversions as a tax-efficient planning tool. The passage of the Secure Act in December of 2019 extended the age of required minimum distributions to 72, but replaced the lifetime stretch IRA for beneficiaries with a 10-year rule for a majority of beneficiaries. Also, the passage of the Tax Cuts and Jobs Act reduced tax rates to historical lows. These events have highlighted the tax burden you might be leaving to your beneficiaries by continuing to have your retirement assets in tax-deferred investments. Let me give you a simple example of why. If your taxable income for 2019 was $321,450 and you were married filing joint, you'd be in the 24% tax bracket. If your tax income was the same amount in 2026, when the Tax Cuts and Jobs Act is scheduled to sunset, you'd be in the 33% tax bracket. So waiting 6 years to execute a tax-efficient strategy could result in significant tax consequences. It's also important to note the impact that this could have on your spouse as a beneficiary. At some point, your spouse will not have the benefit of the higher standard deduction tax brackets as a married filer, so there could be tax consequences for them. You should consult your CPA and financial advisor to develop the most tax-efficient strategies for your individual situation. That's your tax tip of the week.
You're watching Beacon Retirement Strategies, Nashville's retirement television.
Having no clear retirement plan is a mistake I see a lot in my financial planning office when I meet with someone new. It is extremely rare that someone comes in and has a clearly defined income plan for his or her retirement. One way you'll be able to get a clearly defined retirement income plan is to talk to an independent advisor who specializes in retirement planning. Not someone who is specialized in getting you to retirement, but someone who is dedicated to getting you through retirement. If you don't have a clear retirement plan, then be one of the first 5 callers and you'll receive a free complete planning review. There's no obligation and no cost if you have at least $200,000 saved for retirement. Here's what you'll receive: a free report to sort through your current fees, a tailored plan to help protect your investments, a tax analysis to reduce your tax liability and increase cash flow to you and your family, and a custom income plan to support your lifestyle. So call now for your free, no obligation Beacon Retirement Blueprint.
It's your retirement. How will you live it? How will you be remembered?
Will you be able to take me on vacation?
Will you be there for my ball games?
Will you teach me your values? You'll be able to play with me.
Oh, help me go to college. How will I remember you?
You're watching Beacon Retirement Strategies, Nashville's retirement television.
Hi, and welcome to this week's AskBeaconNow.com, where you email your questions into us and we answer them right here on the show. Pete, I have 2 excellent 401k questions.
Great.
My first one is from Derek in Mount Juliet, and he writes, Pete, I have around $500,000 saved in 401ks, still with various companies that I previously worked for. I will probably work another 10 years. What is your recommendation?
Well, first off, that's a good amount of money that you've saved up.
is.
But if they're in older 401ks, unless, Derek, you are really paying close attention and managing that, which with that many, I don't know how you'd have time to do that, you really don't have anyone watching that all the time, because that's $500,000, probably a big part of your retirement nest egg for the future. I would recommend meeting with someone at least, and maybe there's a way to consolidate those and have a coach that would be willing to look over those and really work them to the best of their ability. And maybe they need to be shifted, some of the investments, to more conservative, more income generating, and to make sure that don't have too much overlap in the various investments, because in that many 401ks, you may essentially have the same investments inside of all those. So meet with an advisor and show them that, let them analyze it and give you some options. We'd be happy to do that.
All right, my next question is from Peter in Brentwood, and he writes, Pete, I turned 59 and a half in December, and my 401k plan lets me do a rollover at that time if I want. I think I'll work at least until I'm 66. What is your opinion about doing a rollover while you're still working?
Well, Peter has a good question and a great name. So, he's got to be a good man, that Peter. So I think that is something, again, that is, you need to meet with someone and get some opinions. There are some people that need to leave it right there and just keep it there for, even though they are past 59 and a half and going to be still working. Some 401ks offer some really good opportunities. Roth 401k, maybe a variety of investments, but you could still have somebody giving input into that during that time. For many people, because of the close proximity to retirement and really changing direction the closer you get to retirement, it would be something to look at to see, hey, would it make sense if you rolled that over to an IRA and begin to position the investments in such a way that not only can you grow your money, but also protect them, provide income? There's investments that are offered outside of a 401k that most 401ks don't have in them. There's also some good tax planning that you could do between age 59 and a half and say 66 when Peter retires. So again, a lot of different options. This is too critical not to get good opinion and good advice on.
Pete, thanks so much. And I want to thank Derek and Peter for those wonderful questions. Hey, if you want your questions answered right here on the show, it's so easy. Just email them into askbeaconnow.com and we may answer them right here on the show. Don't go anywhere. We'll be right back.
Welcome to this week's Master's Money Moment. This week we're going to talk about the importance of savings. You know, in our country, in America, we're really a country that is far in debt per household. In fact, recent articles indicate that households in America today have more debt today than they did prior to 2008. And yet we know we can all go through tough times in life where savings are going to be required. We may have a medical issue or a job loss. So savings is really important. And it's also amazing that the Bible has many things to say about financial topics like savings. Proverbs 21:20 says, "The wise man saves for the future, but the foolish man spends whatever he gets." There's really a lot of wisdom in saving some of the money that you make for the future, whether it's for an emergency down the road or something that you want that you may have to delay gratification. Even the Bible talks about that back in Proverbs. And that's this week's Master's Money Moment.
You're watching Beacon Retirement Strategies, Nashville's retirement television.
Having no clear retirement plan is a mistake I see a lot in my financial planning office when I meet with someone new. It is extremely rare that someone comes in and has a clearly defined income plan for his or her retirement. One way you'll be able to get a clearly defined income plan is to talk to an independent financial advisor who specializes in retirement planning. Not someone who is specialized in getting you to retirement, but someone who is dedicated to getting you through retirement. If you don't have a clear retirement plan, then be one of the first 5 callers and you will receive a free complimentary planning review. There's no obligation, no cost if you have at least $200,000 saved for retirement. Here's what you'll receive: a free report to sort through your current fees, a tailored plan to help protect your investments, a tax analysis to reduce your tax liability and increase your cash flow to your family, and a custom income plan to support your lifestyle. So call now for your free, no obligation Beacon Retirement Blueprint.
This week we're going to be talking about estate planning with Roth conversions. There are a number of reasons why Roth conversions may be worth considering. The first being that tax reform lowered federal income tax rates for many taxpayers who may be able to take advantage of converting regular IRAs to a Roth IRA. Also, if structured thoughtfully, you may be able to use charitable contribution deductions to harvest losses to offset some of the gain that would result from the conversion. Next, with the recently passed Secure Act, a non-spouse beneficiary will now only have 10 years after the year of death to distribute the entire retirement account. The accelerated distributions may subject the beneficiaries to higher taxable income. That being the case, the use of Roth conversions could give serious tax savings to both you and your beneficiaries. If you're interested in learning more about Roth conversions, you'll want to talk with your financial and tax professionals. And that's your estate planning tip of the week.
Yeah, so I got into financial services a little bit just through some random activities that happened. I was involved in corporate America. I was an executive with a large company and really had moved different places for 4 or 5 years and really just lost passion to work in corporate America. I saw some of the things that were happening that I really just couldn't get on board with and support laying people off and things. It just was never my vision for something I wanted to do with my life, but I did want to help people. You know, oddly enough, Pete, who's my business partner, his wife was my boss in corporate America at one point.
He used to work for my wife, and she would come home from work and say, "I got this great talented guy, and he's so good. I'm glad that I hired him, but I just don't know as he's going to fit in corporate America. He keeps coming in, and it's as if something is leading him another direction. He's very gifted, very hard worker, great man of character and integrity, but he just doesn't seem to fit in corporate America." And he's told me this, that he may be looking for something else. And knowing what his gifts are and knowing that you've started building Beacon and really the direction you want to go, I thought that, hey, this is somebody you may want to have a conversation with, because maybe this is someone that could help you and you guys could build Beacon together. I mean, it was probably like a 1 in 1,000 chance.
And she came to my office and said, "Hey, Pete and I would love to take you to dinner, and you and your wife." And so Marianne and I joined them, went to dinner, and he began to share this vision of Beacon with me, which was much smaller then, and said, "Hey, I've been praying for a business partner for several years. I think you're that guy. Will you go home and pray about it? And then maybe we can get back together and talk about it."
You know, as I got to know him, I realized that we had a lot in common because he grew up the son of a farmer, and I did a lobster fisherman. I mean, they're entrepreneurs. They wake up every day and they've got to make their own way. Nothing is just handed to them. And so the work ethic, the background, small communities, the faith, the family, all of those things, it was like, wow.
So Pete and I are a lot different in a lot of ways, but in the core areas and the things that really matter, we're really, really similar. In fact, I call him my day wife. And so, you know, we've worked together so long now, we can really almost finish each other's sentences.
He has gifts that I don't have, and maybe I have some that aren't his strengths. And so we began to build on that. And finally, I must have been a really good salesman because I got him to leave corporate America with a really good job and great perks and everything to work with me on a hope and a wing and a prayer, and let's build Beacon together. But we did have a vision, we had a dream.
So I went home, and I'll never forget this because I always tell people, Marianne, my wife, gave me the courage to really step out and to do this. We were sitting on the couch after having dinner with Pete and Jenny, and I said, you know, that's got to be the craziest idea I've ever heard in my life, to leave a successful career in corporate America. We've traveled all over the place, moved cities, and take a risk like this. And my wife looked at me and she said, "I don't think it's crazy at all." She said, "You hate what you do." And she said, "I think you'd be really good at this, and I think you should consider it." And that was just one of those moments in time where really my wife gave me the courage to step out and to take a risk, and the results have just been unbelievable over the last almost 20 years now.
You're watching Beacon Retirement Strategies, Nashville's retirement television.
Are you worried that your financial strategy is missing something? Today's retirees and pre-retirees will need to utilize the services of a qualified legal and tax team, as well as a financial advisory firm. The professionals at Beacon Capital Management, Beacon Accounting and Tax Services, and Knight Legal are committed to being your comprehensive wealth and retirement planning solution. And here's the best part. All of these services are under one roof. That's right, let Beacon Capital Management effectively coordinate all of your retirement, legal, and tax planning needs. Our unique combination of licenses, registrations, and specialized education qualify us to work with a wide variety of investments. We can create a solution for virtually every retirement scenario, no matter how simple or complex. Call us today and experience the Beacon difference. Imagine all of your investment, tax, and estate planning questions being addressed around a single table. Call now for a complimentary retirement analysis. There's no cost and there's no obligation as long as you have saved at least $200,000 for retirement. Call us now, and remember, at Beacon Capital Management, peace of mind in retirement requires a plan.
You're watching Beacon Retirement Strategies, Nashville's retirement television.
Guys, great show this week. Hey, thanks for tuning in.
Yeah, and if you want to contact us, give us a call at the office or go to our website.
And remember this, peace of mind in retirement requires a plan.